Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea on a Monday. We'll keep it short. It's an incredibly busy week. We have all the major earnings, Apple, all the rest. We're in the heart of it. Umpteen $1 trillion will report this week and give no guidance forward, given all the uncertainty that we're on. We have an early jobs report on Friday, and then beginning Friday, we go to the Miami Grand Prix, the F1 Grand Prix. Comes back from the other side of the world and goes to Miami. So it'll be just an interesting time, plus all the politics. Mr. Besson, I believe, in a press conference tomorrow, he certainly moved markets today on CNBC and Fox, and, we watched that, observed it, see the markets go from red to green, at least for now, I should say. They went from red to green. Robert Kaplan with us. He's the vice chairman of Goldman Sachs. He's former president of the Dallas Fed, someone that beautifully links the business world to the economics world, the Fed world, and also back to the heritage of the University of Kansas. Robert Kaplan on Washington and Doge.
The nub of the issue right now is it's unclear how much cost savings we're getting out of Doge, okay? And I think that's a part of this discussion. And I think they're still a little bit wedded that we're going to get the offset. We're going to get revenue from tariffs, and that'll help us in the deleveraging. It'll help us justify a bigger tax cut. And I think all the studies I've looked at have shown that every dollar of tariff revenue you get, you give it back, a portion of it in terms of lower growth and damaging groups. But that's the key to, I think, why they're clinging to these tariffs at higher levels, not at zero. And I think they may be better served letting go a little bit on that concept.
And to touch on there, I'm really focused on the growth changes, the growth dynamics that we see off of this moment of a tariff trade war. Special shout out to David Gura up in Ottawa. He had a lot of fun with it, but I did some research on Gatineau, I believe it is, across the river from Ottawa. 71% French speaking is the population, and really only I believe 11 or 12% English speaking. We forget about the bilingual nature of Canada and all of that heritage. We'll have coverage of that tomorrow. And again, what an odd end of April. We're into May 2nd, excuse me. I'm gasping over Stephanie Roth's number for the jobs report. We were at 200 something last time. The survey is 130,000 non-farm payrolls. And Stephanie Roth at Wolf Research is at 90,000, 90, this Friday. Let's listen.
The thing that we haven't really talked about yet when it comes to the labor market is we also have a significant reduction from an immigration perspective. There's going to be conflicting forces on the unemployment rate, where you have the slowdown in the economy putting upward pressure on the unemployment rate, yet a lot of job supply reducing because of immigration, putting downward pressure. So that's why the unemployment rate is not going to rise as much in our forecast versus what would otherwise be the case.
Stephanie Roth there on the dynamics, really sophisticated dynamics of how Michael McKee and others come up with the unemployment rate, given reduced immigration and potentially increasing joblessness as well. We're on your commute across the nation. Good morning, 99.1 FM in Washington, 92.9 FM in Boston, and Bloomberg 1130. And around the world, good morning on YouTube as well. We're out on YouTube podcasts. This is the single best idea.